Okay, it's the 11th of April. It's a Friday. We got about 30 minutes to the NY Open. We're going to go to the charts in a second. Okay, let's start with the calendar. So today we've got PPI. Now, PPI, I don't put uh, as much importance on PPI as I do on CPI or NFP. Okay, so we've got PPI today, right? They are expecting good numbers, right? But we're very bullish, right? There is uh, all of these news events, including CPI, right? And if we had NFP this week, it wasn't this week, but if what I'm trying to say is if we had NFP, CPI, all of them will be overshadowed by what's happening with the tariffs, right? Um, so these news events really don't mean much, right? And we saw that with CPI yesterday. It didn't mean much at all, right? It's all about the tariffs. It's actually now it's just a trade war with China. That's what it is. It's no longer with the rest of the world. There is a pause on tariffs on majority of the countries, but I think on Europe and China the tariffs are still. I think on Europe the tariffs are still on, and also it's very much on with China. So there is a war now. I mean, there is a tariff war with the U.S. and China, and that's overshadowing everything else, right? So even if there was any major news event this week, it wouldn't have meant much. It wouldn't have done anything in the market. Whatever that's happening in the market is because of the tariffs, right? Let's go to the chart and I'll explain more about that. Now, uh, 1,000 pip daily candle is starting to become the norm. I thought I'd never see this kind of a day, I mean, a kind of a period where the average daily range now is about almost 1,000 pips. That's about 941 pips, right? It's almost very close to 1,000 pips. That's what the daily candles are doing. It's almost 1,000 pips every day, right? Yesterday we had 1,000 pips, a plus 1,000 pip candle, 1,052. Previous day I think it was 1,300 pips. Yeah, 1,300 pips. And this was a 400 and I think almost a 490 pip candle, a 480 pip candle, and that was a low volume day for gold, right? Uh, before any time before the 20th of Jan 2025, a 480 pip candle would be considered a high volume day for gold, a very high volume day for gold. Now, a 480 pip candle is just a low volume day for gold, right? For example, you can see this candle, we moved 630 pips, and that still looks like a very average mid-sized candle comparing to all these candles since last Thursday, right? We had 1,000 pip drop on Thursday, and then again 1,000 pip drop on Friday, and then again almost 1,000 pip drop on Monday, and then Tuesday, Wednesday, and now today's Thursday. Okay, so if let's go up a time frame, take a look at the weekly. Now there's a new weekly SR level that I've drawn here. We'll talk about that on the daily time frame. It's at 3167, right? It's a temp level because when there is one significant touch at a level, then I still consider it a temp level, but it is a level nevertheless. And once there are two or three more daily candles tap that level, then that becomes a permanent level on my chart, a permanent weekly SR level, right? Now, the weekly time frame has moved a ridiculous amount of pips, 2,800 and $42. That's $284 change in price since Monday this week, right? Price dropped to 2956 and has pushed up to 3230, right? 3230. We are very likely heading towards 3250. Who knows? We could be going to 3,300, 3,350, 3,400, right? We could be even heading to 3,500. Very possible, right? That's really nothing because you have one weekly candle that's 2,000, let's say 750 pips, another 2,000 pips, and you're at 3,500, right? So that's so 2,000 pips is a $200 change in gold, and it's really nothing. It's really, really nothing for gold. With the amount of volume that we've seen, 3,500 is very easy to achieve for gold, right? 3,500 is very likely where price would go to, and it's very easy for price to get there, right? With the kind of volume we'll be seeing. Now, the only thing that can change that is some fundamental change that happens with to do with the tariffs, right? If there is a change with the policy on the tariffs, then price can start to go down again, right? Price can start to retrace. Right now, there's a lot of uncertainty in the market, and whenever there is uncertainty in the market, uh, investments, long-term investments, they move to gold because gold is a safe haven, right? And then that means the gold prices go up. They just shoot up, right? And that's exactly what's happening. So if once there is more stability in the market, you will see gold prices going down. That's how the markets work. So until we have that in the news, we have a clear signal, a clear event, uh, a clear news event, or something coming out of the US, something coming out of their policy, or something from China, or something from Europe, some clear policy change that changes this effect, that that will possibly bring more stability, a news event that could cause stability in the market. That's when you see gold will start to change direction and go down. Until that happens, 3,500 is in sights, right? That's all that I can see on the weekly time frame. That's all that I can see. Now, if you go to the daily, yesterday's daily candle closed above 3167. Let's say we closed above 3150 with no top wick, right? And there's so much bullish volume that price did not even create a bottom wick. We pushed up 600 plus pips, right? Past 3,200. We're very bullish right now. We're going to take a bit of time with the analysis today because we've got news at 8:30 a.m. EST, that's PPI. And until then, we're not going to look at opening any trades. We're going to possibly wait for the first 15-minute candle, the news candle to close, which means 8:30 a.m. EST to 8:45 a.m. EST. And that's when we're going to start looking for setups, right? Because I don't trade there are only two news events that I trade the 5-minute, that I look at the 5-minute chart. That's for NFP and CPI. All other days, it's basically the 30-minute time frame or the 15-minute time frame. All right. So on the daily time frame, we have a new weekly SR level. The reason I have this is both the weekly high and a daily high. And that's a clear rejection where price stopped at 3167 to the pip and pushed down 2,100 pips, right? 2,110 pips, 2,100 pips. We pushed down, okay? So that's a very important level. We've had only one touch there, but because of the push down, because it's seen on the daily and also on the weekly, is why I consider it an important price level, right? I hope that's clear. Now, on the daily, there's nothing much to see. We're at all-time highs. We've been at all-time highs for a while. Price is pushing up. Where is it heading to? Ideally to 3,250 today. It could probably get to 3,250, or it could go past that, right? Now, I usually, at the end of the week, we kind of try to predict how the weekly candle will close, right? So let's take a look at that. It's very straightforward. I mean, the weekly candle is obviously going to close bullish, right? Price is not going to push down 2000 pips and close bearish. It's going to close bullish, right? We are very bullish and it's going to close bullish. There's a lot of uncertainty in the market, therefore gold is heading higher. The question is it going to close above 3200 or below it? That's it. That's the only question. Are we going to close above 32 or below 32? All right, so having that in mind, now let's look at the daily. If we close below 3.2, it's likely that price may even come further down to break the low of the current low, grab liquidity at 3167, then push up and close below 3.2. That's one scenario, right? Let me repeat that. If price is to close below 3,200, it's likely that because we have no bottom wick, price pushes down, grabs liquidity from 3167 and closes below 3,200, right? It might still close a bullish candle, but possibly a bullish doji, right? So it pushes down, grabs liquidity, or even if it doesn't grab liquidity, it'll push down and then go back up and close at 3,200. That's one scenario, the first scenario. Now, if that scenario is to play out on the lower time frame, what we would want to see is some sort of a supply, a low time frame supply, like a 1 hour or a 4 hour supply, probably a 1 hour supply. I don't think we have 4 hour supply, probably a 1 hour or 30-minute supply, and price pushing down, right? To come down to probably break this its own low and then come to 3167, right? And then some sort of a 30-minute support form and a push up to come towards 3,200 again, right? So for the first scenario, that's what we are likely to see if the first scenario is to play out. The second scenario is that price closes above we close with a smaller top wick, right? Or price pushes up to 3250 and closes with a smaller top wick. So either we close somewhere just below 3250. I mean, the high is below 3250 like it is now, or price continues to push up and we close with a smaller top wick very close to 3250 or above it. For that to happen, the daily candle will need to close a strong bull candle, right? Which means it'll require a liquidity grab will be needed. A liquidity grab will be needed if for price to close a strong daily bullish candle, right? So then again, we might see a pullback, but not probably down here, probably closer to 3,200, and then we look for 30-minute support, or depending if price is very far from the EMAs, maybe 15-minute support and a push up towards 3,250, right? That's the second scenario. Let's go to our trading chart. Now, before we draw our zones, let's do a quick recap of how we ended yesterday. If the trade idea or whatever trade idea that we had or took or didn't take, we want to just see if they played out, right? Now, it was CPI, so we were looking for 5-minute support, but I was waiting for price to come to a liquidity level, right? I said price will head to 3135. It'll first head, it'll tap 3135, which it did. Then I said price is going to head to 3150 and then 3167, right? And all of that happened exactly as I said it happened, but there was no pullback to a liquidity level, right? It was too bullish, price pushed down. But if you look at the 15-minute time frame, because I said that on CPI and NFP we look at the 5-minute or 15-minute time frames and not at the 30-minute. So we formed a price push down. If you go down to the 5-minute, we created, we did take sells here on the stream. When price rejected here, we took sells, right? And price did come down and hit our TP at 3117. I think we took sells somewhere around here, and that was almost 150 pip move, right? And I said we look for 5-minute support and 5-minute structure for NFP and CPI, and we had 5-minute support form. Now I was anticipating this at one of the liquidity levels, either the EMA or the BRN or at the liquidity candle. Price didn't do that, right? But it did create 5-minute support here. And if you go up to the 15-minute time frame and draw the fib, this candle broke this low, and this candle broke this low. So this would be the most recent high to the lowest low, and price came down and it did not break this fib low, 311610. It did not break it. It tapped it just above it, probably about a pip below. This low is 311614. 311614. Okay, and this low was 3116.21, right? So it didn't break below this low, it respected the low, and that's why the fib model that I use, the M15 fib model I use, is so important, right? um, it did not break the low, and it just carried through, right? Look at that. That's over 1,000 pip move. It pushed, but this move happened much later on. We ended the stream somewhere here. I think I ended the stream. After those sells, I didn't look for any more trades because price just, during CPI, we had absolutely no volume, right? It was just range. The market moved sideways, and I wasn't actually considering this 5-minute support. I ignored it because this did not happen at a liquidity area. It happened in the middle of nowhere, and I don't take trades when it happens in the middle of nowhere. Can it still work? Of course it can. Price can do anything. Price can do whatever it wants to do, but that doesn't mean I have to force a trade or take a trade, even though the setup was it did work. Price did not come to any one of it didn't come to one of these liquidity levels, and these are my areas where I wait for price to come to. Okay, so but price, did it move up? I said absolutely no sells yesterday, like I did the day before as well. There are no sell areas, and price did work, and it pushed all the way up. Okay, so let's get rid of all of these and start with our analysis for today. Okay, so we've got 3167 here. That's a new weekly SR level, right? But it's a temp level, so I'm not labeling it. 3167 is a new temp weekly SR level. Okay, so let's go to the 4-hour time frame and see what we have. So we have a rally, a base, and a rally. That's pretty obvious, right? But it's crossed a BR in a psychological round numbers, so we're going to go down to the lower time frame and take a look at that area, right? Let's go down to the 30-minute. Yeah, that's good. But this is a reaction of this demand. So you have a rally, 3 basin candles and a rally, and this is a reaction to that. So we are going to draw it like this, right? You can see the rally, the base, and the rally, right? This is demand. Price has reacted to it and pushed up. Okay, let's put the numbers here. The open is 725. I'm going to use the 4-hour candle as the base. And then the 30-minute low, 315. Okay, below that we have a rally, base rally again. Let's take a look at that level 2. That 2 went through a weekly SR level. So let's go down to the 1-hour time frame and take a look at it. Maybe even on the 30-minute. Yeah. Okay, so what I'm going to do is I'm going to split this into two zones, right? You have a rally, three basin candles and a rally, and then a rally, two basin candles and a rally on the 1 hour. Instead of having one large zone there, split it. Let's take a look at it on the 30-minute again. No, don't have to. Take it as one. Yeah, let's keep it like this. Okay, so this is the leg in. 1, 2, 3, 4, 5, 6 basin candles and the leg out, right? This is the clean push up. I always say whenever you're confused about drawing zones, look for the clean push up, and that would be this. Yeah, this was the market open. It opened right here and it's pushed up straight up. It was without a pullback. We could possibly come down to tap that low. 539, low 152. Okay. And further down we have demand here. Now that has not gone through a level, so I'm going to just draw that the way it is. But this candle has gone through a level, so we're going to take a look at this area, right? But this one is okay. 236 and 348. Just give me a second. Okay. Let's take a look at this area here. 3135. It's clean push up, 30-minute time frame. Yeah, there is a base there. Yeah, we're gonna have to include all of this. 30-minute time. So yeah, that's better. This would be the leg in. All of that would be the base, and this is the strong push out, and it's pushed out of 3135. That's why it's important that whenever your price goes over one of these, you have to go down, maybe down to the 1 hour, sometimes maybe to the 30-minute, to have a look at that area to find the zone correctly. 6, 8, 6, 3, 4, 8. Now that is 980 pips. I think that's good enough, right? I think that's good enough. We don't need to go any, even if you don't need to take a look at this area, because this covers a wide area, right? These are all 4 demand areas. They're all visible on the 4. Okay. Right. Let's see if you have supply. Right? Do we have any sort of lower time frame supply? Yeah, we do. We have this. We have a rally and we have a drop here. So let's just mark that. Okay, 30-minute rally base drop. Okay, um, 776523. Let's take a look at it on the 15-minute. No. Yeah, let's keep it on the 30-minute. So this is 1 hour supply because it's visible on the 1 hour, right? Rally, drop. Okay, so these are the zones. We have 3 new demand zones and 1 supply. Okay, let's take a closer look at this area just once more. I'm going to bring this down here to this 728, 563. Yeah, that's better. So we've covered, yeah, this is 1 demand level. So I've combined two demand levels into 1 H4 demand, right? Because it's visible on the 4 hour. But if you go down to the 1 hour, that's clearly 2 demand levels. There's a rally, base rally here. This is the source, price came, tapped it, this is a reaction, and we formed a drop base rally. So I've combined them both into one. That is why you have a larger zone here. And I've refined that zone on the 30-minute, right? You can see the drop, 3 basin candles and the rally. And then this is obviously the part of that zone, because I don't want to draw another zone here, right? I don't want to split it, because this would be one and this would be the other. I don't want to split it, so I made it into one. Okay, that's good enough. Now, let's see, look for high liquidity zones. Let's start with supply, right? Has this taken out anything to the left? We have a rally, 3 basin candles and a rally, right? Or a rally, 2 basin candles and a rally, and we've broken below it, right? We've broken below this low. So this is a high liquidity zone. Now, just because it's a high liquidity zone, that doesn't mean price can't go through it, right? Always remember that, because that is how, and that's where supply demand traders get it wrong. Just because they draw a high liquidity zone or a supply zone, they expect price to come, tap that area and then react. It doesn't need to, because you have to have an understanding of how liquidity works, and that's not how liquidity works. Liquidity works, price will come here, it'll look for liquidity. If it finds enough liquidity here, then it'll push down. If it doesn't find enough liquidity to go in the opposite direction, it'll go to the next level, right? And the next level above this is 3250. It'll go there, right, to grab liquidity to push down. Now, in between this 120 pips, price can also reverse, but we don't have any information to the left because we're at all-time highs. So there is no technical information above this high to the left, right? But price can, if there isn't enough liquidity here, it'll go above it. It'll break the high, go above it. And where would it go? On the chart, all we have is 3250. Okay. We have a demand level here. We have supply here. A rally, single basin candle and a drop. And this move up here has taken out this, right? So this too is a high liquidity zone. Okay. Then we have a demand level here. Let's get a 30-minute time frame. Yeah, we have a rally and a drop. So there is a base there. On the 15-minute time frame, there will be a base there. That's the base, rally, base, drop, and this move up took out this high, right? You can see this candle has taken out that high. So this too is a high liquidity zone. Okay, next is this zone below here. Let's look at the 30-minute time frame because we're at all-time highs. Yeah, we have a rally. We have a base here, 1, 2, 3, 4, 5, 6, 7. All of these are basing candles up to 9, and then a drop here. And this move up took out this high. This candle here took out this high. So this too is a high liquidity zone. Okay, done, right? That is, we've done this. Now we're going to look for high liquidity candles. So this is the NY Open. We still have about 30 minutes to news, so we have plenty of time for analysis today. Okay, right. Next, let's look at the demand. Let's start with supply. Let's start with supply. Let's look for a high liquidity candle. So on the 1 hour we have a wick. On the 30-minute we don't have anything. We don't have a back candle. Let's go to the 15-minute. We have this. Let's mark that. Let's start with that. Let's go down to the 5-minute. So 101 pip candle. Yeah, I'm going to mark that candle. Let's mark that candle. We have resistance there as well. So this one, 523, 515, 5. Okay, that would be the high liquidity candle. Now let's look at this area. Let's start again on the 1 hour time frame. The largest candle here would be this. Let's start with that. The candle is outside the zone, so we're going to have to go down. We've got this candle, which is 147 pips. This is 230 pips. Got this, 191 pips. Let's go down to the 15-minute. 235 pips. Let's go down to the 5-minute. There we go. That's the candle. 138 pips, right? Yeah, that's smaller. So that's a 5-minute candle. Okay. So 766,395. Perfect. Okay. Next one. Here. Just 170 pips between the two. Okay. Let's look at this area. Looking for the largest 1 hour candle. 207 pips. Yeah, let's start with this. Go to the 30-minute. 159. Let's go to the 15. 22. Yeah, let's stick with the 30. 066450. Okay, right. One more zone to go. That's a 300 pip candle. It's 264. Let's go down to the 30-minute time frame. This is very much outside the zone. Let's go to the 15. 279. 183. Let's go to the 5. 150. 184. Yeah, go with the 5-minute time frame for this one. 149. 90, yeah. 534686. 5346. Okay. Keep that on the 30-minute. Okay. Right. Just save this. Okay. I'll be back in a couple of minutes, and we are going to take a look at what price has done in the Asian and London sessions, right? So that may give us a better idea of what price could do in the first couple of hours of the NY Open, right? So you want to take a screenshot of this, you want to copy this onto your charts, you can do that. I'll be back in 2 minutes. Okay, let's go to the 50-minute chart. Okay, that's the market open. Price opened at 3176.5. Okay. Okay. Asian session. Price moved up 370 pips. London session 390 pips. Same move, right? A similar move in Asian and London. Okay, there's a lot of volume. Right, let's take a closer look at what happened. Now, we've been very bullish yesterday, right? Price was very, very bullish. Later on, after CPI, second half of the NY session, price was very bullish. We hadn't grabbed liquidity, but price just was very bullish, right? Because of obviously the tariffs, the uncertainty in the market. We spoke about this at the beginning of the stream. Now, price pushed, the market opened here. That's where the market opened, and it continued that bullish volume. Dipped a little bit, created the Asian low, went straight up and tapped 3,200. Rejected it, immediately closed above, continued to range, created the Asian high, dropped, came back to retest the Asian high, rejected, pushed down past 3,200, came to the liquidity, came to the EMA, right? I would consider this a grab of liquidity from the EMA, right? Because it needed volume to push up. When it comes this close, I consider it a grab of liquidity from the EMA. This is just like a few pips away, right? 10 pips away. It's less than 10 pips, in fact, right? Anyway, price grab liquidity from the EMA, and we pushed up past 3,200. We dipped back in to 3,200 to grab liquidity from 3,200 once again, created a liquidity candle and pushed up past the Asian high, and we created the London high, rejected it, ranged, tried to come back up, we pushed back below. Then we came a second time, closed above the Asian high, okay, closed above the London high, and continued up. and then we closed below. Yeah, this was, now we have, this is, it created 30-minute resistance, closed below. Okay. We've tapped the liquidity candle inside the London session, right? Price created the liquidity candle, pushed up, came back, tapped it, then pushed up. So price has grabbed liquidity from the liquidity candle, right? It does not need to come back down again. It can come as many times as it needs to find liquidity to push up, but it doesn't need to because it's already come there. Now, let's look at supply. On the way down, we created a liquidity candle. We didn't test it. Price didn't test this liquidity candle. Created a liquidity candle, it didn't test it, it dropped down. Yeah, this is 30-minute resistance. Price should come above this. There is no top wick here. We should be coming above this. Now, are we going to come back now, tap it, and then push down to grab liquidity to continue higher? Or are we going to come down, grab liquidity, and then push up? Okay. We'll have to wait and see. When was this created? 1330. We have another resistance form at 1430. Resistance has already formed. Inside of pre-NY hours, we already have 30-minute resistance formed to push down. Okay. We've closed below the London high. Asian high, London high, close below it, close below it. Okay, so 30-minute resistance has already formed, rejecting the London high, right? Pre-NY has already formed it, but there is no top wick, so price could easily come above this high and even above this high. But it's rejected inside pre-NY, so here's what's important. Inside pre-NY hours, right? This is 14:30 IC market server time. We have rejected the London high and formed 30-minute resistance. Okay, so price should technically come down to the London low. We should come down here, right? That's a good 300 pip drop. We should come down here. But there is no top wick here, and there is no top wick here. I would like to see price push up above these highs, maybe close of 15-minute resistance forms, right, from here, and then a tradable 15-minute candle closes for us to come down all the way here. That's a trade that I would want to take. Okay. For buys, I'm not going to buy in the middle of supply and demand. I'm not going to buy in the middle of supply and demand. I don't do that. So like yesterday, if price creates support and pushes up, so be it. But for buys, again, at the liquidity levels, these are my areas. If price doesn't touch them, doesn't come there, and it goes without getting to any of these, that's fine. I'm not a part of that trade. That's absolutely okay. These are the levels that I swear by. These are the levels that I trade by. These liquidity levels, these 5 areas, right? So for buys, I want price to come. We formed 30-minute support. I want price to come, tap this area, create 30-minute support, then push up. For sells, 15-minute resistances should be enough because price has already created 30-minute resistance. So if we come here, if we have 15-minute resistance form and a tradable 15-minute candle closes below the Asian, below the London high, if it closes below the London high, then I will take that trade to come down. First to 3,200, that will be your first TP level, and then to 3,188. Okay, 323188 for sells. But I want price to come up, create 15-minute resistance, candle to close below, tradable candle to close below the London high, and then take the trade. I'm not going to trade in the middle of a zone. I don't do that. I don't trade in the middle of the zone. Okay, and it's a Friday, so I'm going to be more patient today. It's not a very high volume news event. It's not CPI, it's not NFB. So we are going to wait for 15-minute structure or 30-minute structure, right? So I've explained for buys and sells, I've clearly explained what I'm waiting for. Price to pull back, break above this high, maybe even break above this high, create 15-minute resistance, tradable 15-minute candle to close, and then come down, right? That's what I'm waiting for. Okay, I'll be back in about 2-3 minutes. We still have about 8 minutes for news, right? And we're going to wait for the first 15-minute candles because there's plenty of time. We're not trading the news like we did yesterday on the 5-minute. I'm not trading the news like I did yesterday on the 5-minute time frame. We're going to wait for the first 15-minute candle to close. Okay, so I'll be back in about 3-4 minutes. Okay, so prices come above this 30-minute candle high, right? We've tapped it. There was no top wick. We've come above that. Now, like I said, I want for sells, I want to see a 15-minute candle. 15-minute candle to come. Now for buys, you got to remember where your exits are, where the opposite entries are, right? You got to always keep that in mind. Where the possible opposite entries are, right? That doesn't mean exactly where you need to enter. Where the possible entries are for buys are your exits or for sells. So if price is to push up, if price is to come to liquidity, if price needs to grab liquidity, where can it come to? There's a liquidity candle, there's an EMA, there's a BRN, psychological round number, that's 3. And then beyond that, there's another EMA here, and another liquidity candle, and a weekly SR level, right? So 1, 2, 3, 4, 5, 6 levels, 6 areas of liquidity. Price can grab liquidity from to push up if it needs liquidity. But for now, we are pushing up. That's a good sign because I'd like to see price come up here, create 15-minute resistance, and then price to push down. Got about a minute and a half, about 2 minutes for news. As I said, the data, the news data, really doesn't mean anything, right? Doesn't mean anything. Doesn't mean anything because price is behaving, reacting based on uncertainty in the market. That's it. It's very simple. Price is bullish, and it's reacting to the uncertainty in the market. That is why you're having plus 1,000 pip candles every day, and gold prices pushing up. So these news events, even CPI didn't do anything. Yesterday was a very good example of CPI just ranging, did nothing. CPI had no effect on price whatsoever, right? The push, uh, the push that came, this was all because of this push up during NY, 550 pip move up was because of the tariffs. All right, we're pushing up. We created 30-minute support. Yeah, I'm not looking to buy here. Obviously, I'm not buying here because we've got supply right here, but I'm not looking to buy even from here, right? If, as I said, if price doesn't come to one of my liquidity areas, I don't trade. Okay, so we had a 15-minute bull candle close. We have 30-minute support form. Price has tapped the London high again. 730, high 730. Yeah, we've tapped it again. I want to see a 15-minute candle close. Okay, I want to see a 15-minute candle close. We're going to wait for this 15-minute candle to close. Not doing anything until then. Yeah, so we've come above this high as well. This 30-minute that had no top. This one had no top wick. This one had no top wick. We've come above both of them. Now I want to see a 15-minute candle close. and it needs to be a tradable 15-minute back candle close, not a bearish doji, not something like this. That's 15-minute resistance, but that's a bearish doji. Safer stop loss would be above the liquidity candle high. If we get a 15-minute resistance forms and a tradable 15-minute back candle closes below the London high, you can take the trade on the pullback. Safer stop loss will be above the liquidity candle high, and to come down to the liquidity candle, EMA, and the BRN, and even further down to the London low. Those are your take profit levels. Any questions with whatever that I've discussed so far? Please feel free to drop a message in the chat and I'll do my best to answer. Gotta wait another 9 minutes. Let's see how the candle closes. 7 minutes more. Still closing bullish. 15-minute candle still trying to close bullish. It needs to close bearish. 15-minute resistance has to form to take sells to come down. Yeah, we seem like we're closing bullish unless price pushes down. We're waiting for 50-minute resistance to form and price to close below this high, 3227.3. It's nothing yet. No, it's dojis. You have to wait. You haven't formed resistance and there is no tradable 15-minute back candle close. Yeah, I'm not doing anything here. This is a bull candle close. It's a doji, but it's still a bull candle close. I need to see a 15-minute resistance form, a rejection of this London high, because this rejection, the previous rejection, as I said, was at before pre-NY, right? We have formed resistance here, but we formed resistance, and it's not just that we formed and closed below the Asian low. So that's fine, but I need to see a 15-minute, I need to see a candle close in my direction to take a trade. I'm not going to take sells while bull candles are closing. I need to see a tradable 15-minute bear candle close, then we can take the trade up. Can take a trade here, stop loss, but it's better to wait for the 50-minute resistance to form first. That would be how you draw the fib, but you got to wait for, it's better to wait for candles to start closing in your direction before trying to take a trade. What I really want to take, like yesterday, are the buys. Yesterday, unfortunate, we didn't have an opportunity to take buys, right? Price didn't tap a liquidity level. That's what I really want to get in because those are the runners. When you take buys, you can hold your trade for a bit. You can bring your stops at break even and let the trade run until the end of the NY session. But price is still in supply, so it has to drop down. I'm waiting for it to drop down. This is on the way down. We're trying to take sells, but the trade for the day would be, or the trade for the session would be buys and not sells. Sells are a counter trend trade in a heavy bullish market. Um, but price is likely to drop because the supply needs a pullback before continuation, and that's what I would like to take the buys up, but we are waiting for that pullback. 027465. Yeah. Also remember, it's a Friday. Don't try to force a trade today. Have been, if you've taken losses this week, today is not the day to make up for those losses. It's not. Today is not the day to make up for those losses. Okay. So just be mindful of that. It's a Friday, and we are in a very heavily bullish market, and you could see what happened yesterday. There was no pullback to a liquidity level. Price didn't pull back. It came close to the EMA, but it didn't, and just pushed up straight away. So, there's this price is driven. What we need to understand as traders is price is driven right now more by fundamentals than technicals. Okay, there is a bit of a switch in the market right now. We're driven by fund. Yes, technical levels still do work, and they work re- really well. We shouldn't disregard technical, analysis by any form, but we got to remember that price is driven by um, by fundamentals right now. It's driven by fundamentals. So yeah, I still no back candle close. So we're gonna wait. We have to wait for this candle to close to see how this candle is going to close. Another 8 minutes for the candle to close. And see, this is why we don't take sells when candles are closing against us. This is the reason you don't. Because there is, even though price has rejected this, this is a weak, it's a weak bullish candle, but it's still a bullish candle. It's not a bearish candle. If this candle was a bear candle, then you can say, yeah, we've rejected the London high once again, close below, we could take sells, right? And put your stop loss above that. But this is not, this is a bull candle. So you got to wait for candles to close again. So price could push up all the way up. It could close outside the zone, then close back inside the zone. That can happen too. There are no buys here. Can't buy. But yeah, we should be coming up. We should come up further. This was a perfect. This candle took out this low. This candle took out this low. This is the most recent high to the lowest low of that range. Price tapped here, pushed up. But like yesterday, did not happen at a liquidity level, not even close, right? We're like 50, 60 pips away from the EMA. And we've tapped it and we've come all the way to 3299. 45 pip stop loss, 140 pip gain, but no liquidity candle. Didn't tap the liquidity candle. Well, we're pushing up. We're pushing up. Pushing up. We're pushing up. There's a lower time frame demand here on 30 minute, but I really don't. That's just a based rally on the 1 hour, but it's just too close to this. I don't consider that. But that's what price is reacting to though. This rally, 3 basin candles and a rally. That's why I drew this zone here. That's what price is reacting to. It created support here. This candle broke this low, price tapped, it's pushing all the way up, 182 pips. Yeah, it's pushing up, but yeah, this just goes to show that price doesn't need to really push down. It's that bullish that price doesn't need to come lower to the EMAs or a BRN or a significant liquidity candle to a significant zone like this 4-hour zone to grab liquidity. It just continues to push up this 4-hour zone that we had identified. Didn't even come there. It came just there. Didn't tap the zone. And it's pushing all the way up 220 pips, 220 pips, and still pushing up. Yeah, it's 9. It's 9 a.m. EST. I think I'm going to call it a day now because it's a Friday. It's, it's okay not to force a trade today. It's absolutely fine. Next week, what do we have? Let's take a look at what we have next week. So next week next week is the third week of the month. Yeah. So next week we've got retail sales, right? That's the only news event. We don't have anything on Monday, Tuesday. Wednesday is retail sales. Thursday nothing. Friday nothing, right? And then the week after that, nothing. No news, right? This is also, it's not a very important news event. It is in term in the light of the tariffs, no news event is important. Not even CPI, right? It says that's how it is in the light of tariffs, right? That's the biggest news right now, and that's what's happening. So yeah, yeah, I wouldn't have considered this as a zone rally-based rally because there is a 4-hour zone right here. So even though I can see price reacting to this, just like yesterday, price created, there is no bottom wick and we just pushed up. I mean, it's like if you have to look at zones like that, then it's better just like today, NY open, just you could close your eyes and hit the buy button and you would have made money, right? There are some of those days. They don't happen often, but there are those days where you close your eyes and you buy. You just hit the buy button when the NY session opens, hit the buy button and you made money. Today seems to be one of those days. As I said, price is driven by fundamentals, and yes, technically they do come to technical levels, but when it's driven a lot by fundamentals, it doesn't really need to. And that seems to be the case the last few days, right? Look at the daily time frame. Look at these candles. These are not normal market conditions. Uh, even during the Trump 1.0, his first 4 years, you didn't have candles like this. Even though there was a trade war with China, there weren't candles like this. This is just unprecedented. What's happening right now with the markets, and not just gold, with most markets. With the look at the euro dollar. Look at what's happening with the euro dollar. It's just crazy how the dollar is performing against the euro. The euro dollar averages about 50, 60 pips a day, and over the last few days, it's doing about 300 pips a day. Right? That's how, and it's just it's very bullish, very bullish. So yeah, I guess these were buys. I guess there were buys here because 30-minute support formed inside the pre-NY hours, right? This is 1400 hours IC markets over time. 30-minute support formed. You can call this a zone if you want to call it a zone. There's a rally-based rally that's on the 30-minute time frame, which I don't look at 30-minute time frames for zones. My zones are based on the 4-hour, and that is why there's a clear zone here, and price should have tapped it to push up, but it's so driven by fundamentals that it didn't. It just continued to push up. NY session opened, and we just pushed up, and we're still pushing up. Even on the 1-hour, there's a rally-based rally, right? Can bring that down there. 602,852. There are going to be a lot more days like this. This is what you got to remember. With uh, Trump as president, there's going to be a lot more days like this, not just with the trade war. Now, the trade war is going to, I mean, God knows when it's going to end, right? There's going to be a lot more days, possibly, with the trade war. And then anything else that he does creates a lot of volatility in the markets, right? And gold is a safe haven as a commodity or an asset. So investments come, they move from other instruments to gold, and the gold prices go up. So a lot of these kind of situations can happen where price doesn't come to a 4-hour level, right? Doesn't come to a technical 4-hour level, but just comes to a 1-hour level. That's a rally-based rally on the 1-hour and pushes up, right? Now that doesn't mean what do we change our trade plan? No, that doesn't mean that you change your trade plan. It just means that price is driven more by fundamentals right now than it does is by technical. So you just have to trade your plan exactly the way you did, and there will be days like this week. At the beginning of the week, we got some great trades, right? On the first, I think the first 2 days, Monday, Tuesday, we got some great trades, and then Thursday CPI didn't play out the way we expected it, right? We didn't have that big CPI move that we usually see. Now CPI would have played out. We would have had a big move if there was no talks about tariffs. Then CPI is an isolated event, and you would have a lot of volume for that event, just like for NFP, and we would have been able to grab that move. But because of the tariffs, it was overshadowed, right? We are pushing up. We are pushing up. Prices closed above the 3 RR level, 3223, and we should be heading to 3239. Right? I think we've broken above this high, heavy 515. This high is 516. Yeah, so we've broken above the liquidity candle high. We should be pushing up, right? But I don't chase price. I would wait for that pullback. This was, if we consider this as a 1-hour zone, if you consider this as a 1-hour zone, then this was that pullback. 30-minute support formed here. This is the 15-minute fib model, and then the candle came here. Stop loss would be under that candle there, under here, 40 pips, 70 pips, or 45 pips, and a push up here, right? Which price is currently at right now. So yeah, so don't try to force a trade today. Just take it easy. There are going to be many more days like this, right? Next week, there's going to be a lot of volume next week as well. I mean, we've moved a lot today already, and we've moved a lot this week. Yeah, look at that. Almost 3,000 pips in a single week. Look at that weekly candle, right? So it's very likely scenario, the second scenario is playing out where we close with a very small top wick, right? We spoke about this. Either we're going to close with a big top wick for next week to fill, or with a smaller top wick, and it is a smaller top wick. So I said price would be lucky if you pull back to 3,200, but it didn't, right? It didn't pull back to 3,200 for us to get those buys. It just pushed up here, a good 130 pips away from it, and it just continued to push up. I was anticipating the push up, but for price to come to a liquidity area and then push up, but it didn't. And that happens. That's okay. Just have to be patient. Call it a day, call it a week. Start your weekend early, and then come back to the charts fresh next week, and we'll do the exact same thing. Draw our zones and then wait at those liquidity areas, at these areas. All right, yeah. So I'm going to end the stream now. I'm not going to be taking any more trades. I'm not going to be taking any trades. I didn't take any trades today. I'm not going to be taking any more trades outside of the streams either. I'm calling the week. I'm going to start my weekend, and that's it. Yeah, because I mean, price has broken the liquidity candle high. Do not sell. Do not take sells here. Even if there is a 15-minute resistance form here, a tradable 15-minute candle close, don't take sells. Price has broken the liquidity candle high. We should be pushing higher, right? What you can do if you really want to take a trade are buys. Wait for a pullback, wait for price to pull back, create 15-minute support again, a tradable 15-minute bull candle close, and then take the trade. Stop loss would go under that 15-minute candle low that created support, and then take the trade, right? That's the trade idea. That's what you want to take. Wait for the pullback, wait for 15-minute support to form and a tradable 15-minute bull candle to close. Uh, Wait for the pullback, take the trade. Stop loss would go under the 15-minute candle low that created support, and your TP would be the high that we create, right? And then 3250. Those would be your TP levels. Okay, but do not try to sell here. Once we break the liquidity candle high, there are no sells. Price is heading to the next liquidity level, right? You might have a pullback, but that doesn't mean that you can sell, because there is no more liquidity to sell. If you're buying or you're selling, you want to do it from a liquidity level, because the liquidity level tells you that there is liquidity there to go in the direction that you want price to go. Now there is no sell liquidity. Price is broken above the high. There is no liquidity for price to push down. It might do a pullback, but that doesn't mean that you can take that trade, at least on the 15-minute and 30-minute time frame for session trading. Okay, if you're a scalper, of course you can. If you're a scalper, then you can look for scalping trades on the 1 minute and the 5-minute time frame, but on the 15 and 30-minute, don't try to take trades here. Don't try to take sells here. You can take a buy, exactly as I explained. All right. Okay, so that's it. Don't overtrade, don't over risk. It's a Friday. Don't try to make up for any lost gains this week. Today is not the day to do that. It's also very slow. We might have volume like yesterday after NYSE open. Yesterday volume came in at with the 4-hour candle open, right? So the 4-hour candle was 46 minutes for this 4-hour candle to close. You might have volume come in then, right? So basically wait for the 4-hour candle to close. There is 40 minutes, around 45 minutes for the 4-hour candle to close. Wait for the candle to close. Right, there's about almost about 45 minutes, a little over 45 minutes for a candle to close. Wait for the candle to close before you decide to do anything, right? And it's only buys. Look for buys. Wait for the pullback. Wait for 15 minutes support, or even 30 minutes support to be created. A tradable bull candle to close, and then take the buys to retest the high. We've created we haven't made a new high yet. This is the new high. This is the London high. We haven't. I'm sorry. This is not the London high, but this is the previous high. We haven't created a new high in the NY session. So you want to wait for a new high to form, to break above this high. That's a new high form. Then wait for the pullback support to form, and price to go up and retest the high and continue towards 3250, right? That's the trade that you want to take. Don't take sells. All right, that's the end of the stream. See you guys on Monday, 7:30 a.m. EST. Uh, we'll do our prep work, 30 minutes of prep. There's no news on Monday, Tuesday. So we can look to take trades after the first 15-minute candle closes, after the first 15-minute candle opens and closes of the NY open. There are no news events on Monday and Tuesday. All right. Yeah, that's it. Have a great weekend. Stay safe. Don't overtrade. Don't over risk. That's a weak bearish candle. Price should break this high and break this high pretty easily now. Right? It's a weak bearish candle. We should be pushing up and we should be coming to 3239. Once we get to 3239, we should be coming to 3248. All right, take care. Have a great weekend. See you Monday, 7:30 a.m. EST. Take care.